So we are waiting for Tyler, anybody else? Other people are joining, right?
Yeah, is it Kapil?
Kapil, yes.
Got it. Okay, I see you.
Tyler, how many people accepted this invite?
Hey, what's up, Kapil?
Hey, hi Josh.
How are y'all doing? Yeah, we'll let people in a moment. We just want to do a quick meet and greet.
Okay.
And I don't know where Josh went, so
Yeah.
I guess we'll wait a second for him. Oh, there he is.
Yeah. And let me,
that was a good one. Where did he came up?
let me introduce Tushar and Kapil. Tushar is first Tyler. Tyler is my team lead over here in the EXP Realty, and Josh is our investor real estate person. We all part of a group, and we help each other with our real estate, our lending, our wholesaling in the real estate industry. And Tyler and Josh, Tushar is here with us. He is a very senior broker in the financial industry, and he leads almost more than 1,000 broker like me. And he's here for long time. And same thing goes with the couple. The couple is a senior leader. He works with me, help me in my clientele and everything. And me and couple are part of Tushar's team.
That's awesome. Yeah, nice to meet you guys.
Yep. I've dealt with one EXP realtor in the past. I was buying my office in Virginia, and I think that deal was brokered through a EXP, as a company.
Oh, perfect. So you're very familiar.
Yep. I think cool. one of the realtors from Virginia area part of EXP team.
Yeah, that's great.
Where are you guys based out of?
I'm based out of Texas. Josh is out of California.
Okay, all right.
So yeah, Josh, I guess anything.
Yeah, it's good to meet you guys. Any topics you want to touch base on, or I'm just going to kind of introduce you guys, interview you guys, kind of, and then anything we want to talk about, open it up for questions.
So, couple of things. People coming in are all realtors, or what's the kind of our clients or mortgage people?
Mostly real estate agents, investors. That's probably it.
Okay, approximately how many people expected?
20 maybe.
Okay,
25, right. Yeah.
And these are all like new realtors, or
No, they're a mix of seasoned realtors, brand new realtors, a couple of years into the industry, but yeah.
Sure. Any specific areas you want me to go deeper in? Any specific areas?
I think they'll ask that question, but for me personally, just how the landscape of insurance has kind of changed over the years, and where do you think it's going, and how do we navigate as agents to prepare clients in the future?
Correct. Because we do work with a lot of realtors. Actually, a lot of realtors collaborate with us, and it's like a normal offset, or adding in an offering to people's portfolio. And coming from a different industry, it does not conflict because it's a different line of business entirely. But I don't know, when you want me to keep it product centric, industry centric, trend centric, opportunity centric, I don't know what you would want me to focus on.
Yeah, let's see. We'll start and we'll get the conversation going, Tyler, and we'll see where we end up at about 4:30 Pacific Standard Time. We'll open it up for some questions and see where it takes us.
Is there any particular, because I think there was some messaging initially, we were preparing for some deck presentation, then we were saying, hey, stay away from slides. So I don't know if there's something specific.
Yeah, I would stay away. I don't want it to be too presentation-ish. I want it to be very engaging and back and forth, and that's what the people like. So we'll see what comes up.
Sure. How long you guys have been with EXP now?
Tyler's on year 40.
He doesn't look that old, man. Come on.
Yeah, that's EXP. Benjamin Button. It makes it younger.
Yeah, 8.5 years.
8.5. Wow.
Yeah. But yeah, we should let people in. Are we going on YouTube, Josh, or no?
Not today, because I'm not at the home office. But we could.
You want me to record?
Yeah, you can record it. We'll post it later.
Okay, cool. All right, yeah, we can get started if you guys are all ready.
Recording
to
in
go.
progress.
Welcome, everyone.
Hello, sir. How are you?
I'm doing great. How are you doing? You got a new background. What's going on over
New
there?
background. I was showing some houses. Some of us have to work around here, Tyler. And my main investor wanted to go have lunch, and I said, let's go have lunch. And then lunch went over. So I'm currently in some stranger's office downtown San Diego. I have no idea where I am. Basically kidnapped. We're having lunch with one of his friends who has an office down here, and I said, hey, I got to run for my Zoom call, and he's like, "Oh, why don't you just use my office?" I was like, "No, we'll go to the lounge across the street." He's like, "No, no, no." And so here we are. I have no idea where I am, but it's beautiful. I like it. I think I might keep it. What do you think?
I mean, I approved. I mean, yeah, I wouldn't. I mean, it's a nice backdrop. I think
Yeah, it's like perfect. It's not my family. Beautiful family. It's just not my family. But I guess you guys wouldn't know that. Like, you can't really tell. Just looks. I'm looking the part. But yeah, we're today. Who are we with, Tyler? Let's get some introductions going here.
Yeah, we've got some insurance pros in the house. We're going to learn kind of more about the ins and outs of how to navigate things from that perspective. I mean, it's an important thing. It comes up every time there's real estate, right? They want to know that it's insured, and there's. I think that's kind of the probably the first layer of the onion peel as far as how far back you could go with insurance in general. So I know it's an important aspect of not necessarily what we deal with, but it's a piece of what we deal with along the way, right? So
Yeah.
It's
a part of the transaction that no one thinks about. I think they think about the inspection, they think about appraisals, they think about the lending side, they think about looking at houses, they think about contracts and requests for repairs, but they don't think about insurance. And I've been in situations where it's kind of blocked deals, California especially. We have a thing called fires, and apparently insurers don't like fires and earthquakes. We had floods last year too, so we got it all. And so insurance providers here in San Diego, California in general have been running for the hills. And so it's been a hot topic of late. And so I wanted to bring on anyone who can kind of explain what's going on, why it's going on, when is it going to come back to normal, and where are some of the opportunities in the industry for real estate and insurance. So pleasure is mine, everyone here. I have Amandeep, Tushar, and Kapil. How are you guys?
Hey guys.
Hey, how are you?
Hi guys. Yeah.
Did I say those all
Fantastic.
right
I'm
or
super
what?
excited to collaborate here.
Yes, we're excited too. Everyone will start to trickle in. A lot of people just got the notification, so hopefully more and more people show up. But we're going to go talk for a little bit, 20 minutes or so, and then open it up for some questions. Just keep in mind, this group gets shy. The only person who kind of talks is Tim usually, so we've got to kind of open them up. But at the end of the day, go ahead, take the mic, introduce yourself, let us know who you are, where you're from, what you specialize in, and we'll take it from there.
Sure, absolutely. So I'll get started here. So this is Tushar Berry. I come with, almost, hey, don't push the age button here, but 25 years in industry experience in banking and financial sector. So, that just tells you, I started working in banks when I was in school. How about that?
Wow. Yeah, that's awesome.
So I've been around the globe. I've worked with some of these top financial institutions across the, pretty much in 4 countries before I came here. And now I've been focusing on certain segments. I did, hear you guys about some of the pain points and areas. And also we said, okay, let's just get together. Let me bring some thought perspective there, because I have almost 2.5 decades working in different aspects of the industry. We are licensed. I'm part of national level. Actually, the country's largest broker hub. I'm one of their country heads for them. In our side of the world, it's called the CEO MDs, and just kind of leading a team of about 3,500 plus professionals across the country. That's my experience and exposure today. We are also licensed just like realtors, and we work in specific areas. So we work in the health, life, retirements, PNC, and property casualty. We keep it out for now, but we'll talk a little bit more on that. But that's my background, and I'm happy to help share my experience and the kind of traction we're getting. I pretty much operate across the country with many realtors, many mortgage officers, and also some of the pain points that Josh and Tyler you were talking about certainly relate to that, and happy to help out clarify some questions. With that, I will pass the baton on to Kapil.
Yep. Hello, everyone. I'm Kapil Bharadwaj and based in Virginia, Washington, D.C. area. I'm working in insurance industry for a couple of years myself, but I have roots back in India as well. Like I'm basically from India. So my parents also used to do this. So I grew up seeing all those industry, how the market is changing. Mainly my focus is towards the life and health side of the business. So that's where I focused or the expertise in. And yep, happy
Cool.
to share my experience here.
Awesome. Since everyone here is mostly real estate agents, we'll stick with homeowners insurance, I guess, but health insurance and auto insurance, life insurance, all factors, I guess, especially life insurance with what you can do and real estate. But I wanted to kind of stick to homeowners insurance, right? And the biggest thing, as I mentioned, is fire. So what can we do as agents to prepare people for that conversation with their insurance agent? Like, what does insurance actually cover when it comes to a natural disaster like a fire, a flood, or earthquake? What really happens behind the scenes, and what do we look for? So let's take a house down the street; it gets set on fire. What are kind of some of the things to look out for?
Is that a question?
Yeah, Tushar, anybody? Yeah, to walk us
I'll
through
tell
the
you,
steps.
Josh, about my experience here, right? I mean, because I've worked in all three verticals, insurance fundamentally is three sides of the house. It's property casualty, it's life retirements, and health. When it comes to property casualty, right, a lot of the times it is every area, every belt, these providers come in and they are hedging the risk. Now, if they have a certain portfolio and a certain book of the business and their risk starts to go up, they have factored in a certain claim ratio. And most of the property casualty business, they expect no more than 55% of the premiums as going out in claims. And that too over a span of years, right? That's not year one. So when they're collecting premiums from the clients and they are expecting that over the next 10, 20 years that you hold these properties, there'll be a set number of claims. But the minute it breaches out, right, it goes above 55%, so that puts the entire portfolio and the company at risk. And the first reaction is yes, they will start to bump the prices up, figure out how they can keep their companies solvent, and that's when you see some of the the premiums go up on a case by case basis. And then when there is a natural disaster, so you have to realize once the contract is in, they have to honor those commitments behind, if it's a fire or a flood or a hurricane, and depending on which area you are in. If you're in Florida, it's a different kind of thing. If it's in California, there's different kind of things, right? And there are fault lines there. So that's what is happening, that in the high risk areas, a lot of the insurers are beginning to move out or opt out of insuring any future books because their portfolio is already running a high risk. Whatever risk tolerances they had, they're kind of getting there. So that scenario is something that's what we're facing in the industry right now. If it's not commercially viable,
it sounds like it's almost like a game, essentially, right? It's balance sheet versus risk, essentially, right?
It's not a game; it's a mathematical equation, right? It's a probability of an incident happening. The cost of that incident, if you look at pre-COVID and post-COVID, the labor costs have gone up, the material costs have gone up, and in most cases, it is about the jackup is at about easily 30 to 40%. Now, a part of it they've been able to pass through in the premiums, but the replacement cost of those houses have gone up significantly, and of course, there's that element of being on the street. I've had a few friends who lost their houses in fires and all, just the replacement cost and the claims behind it. And then you have to resettle the family, give them a temporary accommodation for a year and a half, 2 years, and until their house is being built and all that. So a lot of that, the prices have gone up tremendously. Now, what does as a business owner do, right? These companies do. Either they have to insure or honor that commitment, or hey, cut the losses and stop writing it for a while.
Yeah. Okay. That makes sense. And in terms of this whole tariff talk, how does that affect pricing in the actual equation here? Like if we're going to get
It's
Yeah.
all based on the materials thing, right? Where all they're getting the materials from, the construction, the wood, and all the other things, right? What part of it is coming from Canada, Mexico, or other places? I mean, all of that is going to have a bearing, right? And some of these go up and down. Some industries hedge the risk a bit, but it's going to pass down.
That's crazy. No, didn't even think about it, to be honest with you, when all these things go around, that this could even be a conversation piece. But it sounds like it is a big mathematical equation that everyone kind of has to pay attention to.
And that's how any financial industry works, right? I mean, it is a question of, if the interest rates go up, what happens?
Yeah, prices go up.
Taxes will go up. The debt is rising. Inflation is going to go up. Now, a lot of those things you can't control.
Yeah, that's true. Now, in terms of tips and things to look out for when looking at a property, say it's my first day looking at a home, right? Am I looking from an insurance lens? I know there's reports like the Clue report that kind of tell you the history of the property, kind of gives you the background of what's been filed. But when I'm walking into a home as a realtor or as a homeowner, home buyer, what should I be looking at?
See, one thing that I would say, if you are in a high risk area like California and all, just make sure that you're not on the fault line. Do your due diligence. I've seen a few friends, like a property, do all of that, and then they find out, hey, it's either coming very close to the fire hazard line or something like that. So you got to do all of that, and as professionals, we got to help the clients, avoid those things.
Yeah,
it's risk mitigation early in the game.
Okay, that's good feedback.
Have you ever seen someone who came to you with like a property they wanted to insure that?
I'm not in PNC, so
okay, got it.
I'm a property and casualty guy. So I'm a specialist in how to help people fund for that property. So I work with a lot of investors park their capital in a safe way. So that's what I design. I do estate planning, estate preservation. I do create, private asset funds. And then how do you rotate the funds? How do you create leverage on the funds, on the funding side of it? That's where I work with realtors. So I'm the money guy behind the real estate deal.
How about investors? So you work with investors.
So
what do we need to know?
Yeah, so I'll tell you. See, in a typical model, and this is something people don't realize, right? You tend to stay away, or he's the bad boy in the room, is the insurance guy. No, it's not that way. Did you know that 70% of estate planning is built on top of an insurance plan?
No clue.
70%. Imagine that. Okay. The entire countries, if you look at the entire industry, why is it that 70% of estate planning is on the backbone of an insurance plan? Because the way it's designed. Then if you've ever heard of TFRS, tax-free retirement accounts, if you've ever heard of infinite banking, it's all underlying chases is actually an insurance plan. Insurance is nothing but a wealth planning instrument in your asset, in your portfolio. Now, if you think about it, how do people in real estate operate? They go from one asset to the other, to the other, to the third, to the fourth. And a lot of the times, whether you're flipping properties or you're buying assets, there's a lot of leverage play and there's a lot of cash movement in and out. So a lot of my real estate investors actually usually have anywhere from 100,000 to 300,000 somewhere stashed out for the next potential buy. Okay. Now, where do you think people keep that money?
Bank account.
Bank account earning anywhere from 0.25% to 3% to 4% in a high yield account. What if I could give them an alternate instrument that helps them grow that capital at an average of about 6 to 8% tax free, and gives them a protection of anywhere from $2 to $5 million on the back of it, and gives them almost by third year a good 75 to 80% liquidity on their money? A lot of investors want that kind of an asset, especially if it is bankruptcy proof. Think about from an investor standpoint, if you could have a private stash to keep some money away for a couple of years and use it when you need it, but it's even protected asset to the point that nobody can even file a lawsuit or a bankruptcy claim on that money.
Sold. Where do I sign up?
That's the reason people, real estate investors work with me.
Yeah, that's cool. Now, is there a lockup period, or how long are my funds tied up for?
So most of these funds, usually they give you 100% fluidity, definitely after 10 years, but after first year, you can free up roughly about 60 to 70% of the capital. By the second year, you can free up, and this is based on the designs we built, you can
Yeah.
free up about 70-75%. By third year, you'll see about 85%. So, roughly about by the fourth year or so, it will be almost 100% liquid.
Wow, that's not bad.
And any compounding growth that you get on that is tax free. And not only that, there's another very powerful feature on that fund. Just like you can take a real estate asset and create a HELOC or a home equity line to pull the cash out of it and then fuel the growth for the next property buy, is the exact same concept here. If you have some asset built here, and if you like the growth here, and which is tax free, growing at let's say 7 to 8% and backed by no loss guarantees, you might as well, instead of liquidating that money, keep that growing, collateralize that at 5%. And even on the pulled money out, you can still get a gain of 3%.
Yeah.
It's a very, very smart way of accelerating the leveraged growth path. It's almost like a real estate parallel, but you've got to be able to design it that way.
That's interesting. Yeah. Any questions so far by anyone? The mic, the floor is everyone. So if you guys have any questions, raise your hand. I don't want to hog the spotlight, but that's an interesting type of policy. What's that type of policy called?
That's a life insurance.
Oh, wow. Standard life insurance.
It's a permanent life insurance. It has to have an asset holding capacity inside it.
Oh, wow.
And we use the indexed format, which is a guaranteed no loss fund. We actually, I'm a country level broker head, and we work with some of the top 8 brands in the country today. So we are authorized distributors for Allianz, AIG, North American, Nationwide, Mutual of Omaha, Lincoln Financial, all these name brand companies, because this can be designed on, again, it depends on the risk profile, the age of the person, the health situation of the person, how much cash you want to put in, how soon do you want it out. So we kind of design that out for people.
And what happens if you die?
Well, that $2 to $5 million base plus whatever is your cash in there is all given to the family.
Oh, wow. That's nice of them.
Because it's
So
life.
I'm worth dead. I'm worth more dead than alive. Is that what you're saying?
Why not? It's called it that way, right? A live elephant versus a dead elephant. There's a colloquial usage there.
That's true. That's true. Awesome. That's cool. That's exciting stuff. Now, so who's in charge of the homeowners insurance side? Kapil?
No, I'm also on the life and health.
Nice. We're not talking home insurance anymore then. I'll shut up about that. So let's go back to it. So this is basically infinite money system, right?
Yes, it is.
It's
It's
like
called infinite banking. If you read about infinite banking, that's what I designed.
Yeah, I've seen things like this, and I always
Have
thought to
you-
myself, it's too good to be true. It's a scam.
Definitely
Where's
not.
the catch? What's the catch here?
Yeah, you got to work with somebody who knows what they're doing. It's almost like work with a cardiac surgeon for cardiac surgery. Don't try to do it on Google.
Well, yeah, I'm never going to search. ChatGPT now might be beneficial.
I'll tell you one more thing. Have you heard of premium financed models?
No. Talk to me.
Just like real estate, you can buy life insurance if you qualify, because this is more for investor grade people. If your net worth is more than 5 million, you can qualify for a financed model where you can even finance your premiums up to 80% or 90% of the money coming. There's a lot of leverage that you can build in there.
That's interesting. So what's the purpose of that? To have a policy in place that you're not paying for? Or?
Yeah, that you're just like you move into a house by dumping in 20% and paying the monthly EMI. It's the same concept there.
And it's just a little bit more discounted. And then you could always take the funds out and reverse engineer it and use those funds. That's awesome.
Again, it's a case-to-case basis. I'm just telling you, these are all niche areas that we work in. I'm actually in this whole area of estate planning, finance models, and the leverage models and the infinite banking thing. I work with one of the top 2 brokers in the country.
Wow, that's crazy.
Yeah.
Any questions, Tim? Any questions? Tim looks more intrigued than anyone here. No, Tim?
I'm just
I would
taking it
agree.
all in.
It's pretty interesting, I guess, to start. Now, what's the first step? You go through an application, you take a blood sample. What do you do here? How do you
It depends
dictate
on the
what?
health and the rating. A lot of the companies up to 5 million, they don't bother about it if your health records are clean. But usually, beyond 2 million, 5 million, if you want the higher risk covers, is when they start to go for the blood and urine and all that.
Oh wow! Why do they
As long
want?
as you are legal resident here in the country, they can find your details. This day and age, everything is connected. You give them your social, they can tell you what you did in the last 7 years.
Wow, really? That's scary.
It's called MIB, just like credit bureaus for mortgages. It's called MIB, Medical Insurance Bureau,
Wow.
Medical Information Bureau. So all your prescription drugs, all your doctor's visits are cataloged in a giant credit bureau-like system called MIB.
And that's even if I go to Mexico, or no? If I go to Mexico, they can't get that.
And
Right?
not. It's almost like the Men in Black go black.
Note to self: get all supplements and my testosterone in Mexico.
All that prescription you can hide.
Wow, that's crazy. I had no idea that there was a thing called MIB. Besides Men in Black, the movie. So all this is where? I mean, it's in the system, the database on the blockchain, and then anytime they want to see it, they pull it, especially with life insurance. That's crazy because I got life insurance maybe 3 years ago, and they approved me right on the spot.
Which one? Which company did you get it from?
I just have no idea. Some cute. If my wife is watching, sorry, but some cute girl sold it on me. She was hot, and I said, okay, let's do it. She was like, then you have to get it for your whole family, and I was like, oh, wait a minute. I thought this was me and you. Didn't work. But yeah, I don't know which company.
Richard, happy to help out. We do a lot of work with New York Life policies and all that. It all depends if it's a term, it's a permanent. Usually we are able to shop around and get you either a 22 to 25% cheaper premiums or a higher coverage, whatever you like. Either same money, more value, or same value, less money.
Yeah, right. Same thing. Cool. No. Yeah, Richard just said that he had to get blood on his. That's crazy.
Yeah. I mean, we really, we know these products inside out, right? You give us a statement, I can tell you what this is doing inside. So that's what we do for a living.
Nice. That's crazy. Man, I'm mind blown that they have a database of my health records.
I'll tell you another thing that we do. Anybody who's 48 plus, okay, and has any kind of an IRA, because I know a lot of investors work with their self-directed IRAs and all. The SDIRA funds, or any 401ks IRAs, think of it, anybody who's 47, 48 plus. One of the top plans right now is giving a 30% match up and 9.5% compounding for 12 years, and then convert that into a lifetime income plan.
Wow.
I'll give you a scenario, because there's a lot of realtors here, right? I actually have a few clients. So I have a client who's 70 years old, has 6 rental properties. Now she is looking to get out of that, rebalance her portfolio, and she's looking to sell off those 2-3 properties so that, consolidate, do whatever, right? Because she's kind of tired of, managing all the rental properties and all. And if you're realtors here, you will get into those scenarios also. Now, let's say out of those 6 properties, she sells off 3 properties. What does she get? $1 million cash. Now she's 70 plus. The plan that I showed her, it's a guaranteed minimum. By the way, it's contractually guaranteed by a company like Nationwide, which is $100 billion assets plus. They are giving a 30% match up on that fund. So that $1 million, if she moves in with them and they make it 1.3 million, wait for a year, compound that by 9.5%. So that 1.3 million becomes almost 1.43 million in a year. And then use that to liquidate at 6% every year. So that 1.43 million times 6%, her annual lifetime income from that fund is $88,000 a year. Now you tell me, how would she get a rent of $88,000 from $1 million property?
Yeah.
Now imagine if we could do a collaboration or a partnership on some of those deals.
Yeah.
Did you get the numbers, what I said? Oh yeah, it's way more powerful than a reverse mortgage. Way more powerful than See, that's what we are, the specialists in crafting the retirements design and the funding designs and all the other side, right? The life and retirements. You can't beat us. I'm talking about a plan which is only given to top 3% brokers in the country. I'm representing some of the top line products here.
Yeah, that's awesome. Yeah, it's
And
better
it's-
than a reverse mortgage. It's better than any other investment type kind of.
Think
But what's
of
the
it-
catch? I'm still waiting for the catch, Tushar. There's got to be a catch. You want my blood
see,
from
the-
Richard. You want my hair samples. You
No,
have all
it's-
my.
this one doesn't even need medical things. You know, it doesn't matter whether you're taking stuff or not. This is it's a simple retirement fund design. They know that you're going to live to a certain point in time, and they'll keep giving you money and the remainder as money as death benefit. And they calibrate how much to give based on your lifespan. It's a very powerful system. And anytime you do a real estate deal where you are helping the client exit a property, this could be another big chunk.
Yeah.
And if
So
you guys
for
are
my
interested,
example, I
you could
fix and
actually-
flip homes. How does that give me like a real life example for me? I buy a property, 123 Main Street. My goal is to exit within a year. Does that make sense to go this route or no?
See, it all depends on your age and stage in life. When retirement planning, I'm telling you, it is
Or
for people who
retirement,
are high 40s, early 50s. If you know that you're going to exit and use that fund in the next 10 to 12 years,
Yeah.
right? So this,
Yeah,
I gave
I'm
you
old.
for a 70-year-old who was exiting out of her retirement portfolio.
Yeah.
Now I have another example where person is making a lot of money. The guy makes 500, 600,000. Whatever businesses he's doing.
Mhm.
Now, after paying the taxes and everything, he's still netting in house about 250, 300K. Now,
Yeah.
out of 300K, he would like to diversify. Now, he may want to keep buying a rental asset every year just to add on to his portfolio, but nobody's going to put all their liquidity in the same type of vehicle.
Yeah.
Now, the other
Wow.
vehicle, that infinite vehicle I just told you about, if I just help him create a leverage plan in the next 3-4 years. See, you sell $1 million property, I sell one of these plans. Both of us make the same amount of money.
Yeah, that's crazy. That's good to know, though. All these people are agents in here. You're giving people the knowledge of the exit plan, right? And that way they can plan more accordingly. I think right now as agents, we're just giving them what's in front of us. Hey, this is a beautiful 4-bedroom, 3-bath, but we don't mention year 10 through 50, right? Where if they can keep this property longer than they're envisioning and they see that end game where they can actually make some good retirement money, they're in it for the long haul, and that kind of makes you look a little bit better. So as real estate agents, I think we really need this tool to at least be able to market to individuals.
Yeah, and this is all what I'm telling you is not vaporware. It's regulated. It's approved by almost all states other than New York, our popular one. But it's available in all other states, including Hawaii. And almost like a real estate, it's a point of sale system. I get advanced commissions. Most of it is online. The client likes it. We move the money and we get paid.
That's awesome. Cool. Any questions from the group? That's a good summary of what we're looking forward to. I know we have 15 people in here, 16. Anyone have any questions? Richard, Tim, I know Mr. Market never speaks up, but he's there. Ryan Walters, Pedro, Christian, Anthony, Essie, 2 Christians. Wow, 2 Christians. Like it. Johnny, Tyler.
Who has a question about insurance? Especially with what we're talking about. It's super interesting.
I'm still shocked there's a database. I don't think I'm ever going to get over that. I think now I have to go to Mexico for everything. My dental work. Just everything. I just asked my doctor for Adderall. I don't even need Adderall. I was just trying to get it, and now it's going to be in this database. Now I'm in trouble, Richard.
I'll tell you one more interesting data point, which people...
No, don't ruin my life any more than you have.
The funny thing about about estate planning, anything above 13.99 million in your portfolios will be subject to estate taxation.
13.9 million.
13.99 as of today is the limit.
And what's that tax rate?
If you're above $1 million, over that it's 40% Fed.
40% after
Right?
I die?
When I started my call, what did I say? 70% of estate planning is done on life insurance. Don't hate that baby.
Yeah, that's crazy. So I die, all my properties are going to get liquidated and sold. 40%
If your
goes.
net asset, if your net asset per descendant is 13.99 as of today, I mean, of course, every year it fluctuates a little bit.
Yeah.
But as of today, if at the time of passing your portfolio, stocks, real estate, everything, if it's above 13.99 million, everything above that is taxed at 40% Fed.
My kids are screwed. All right, so I should not work harder. I should work less, right?
No, you should work smarter and work with us and do our estate planning.
There we go. I like it. I like it.
So you structure it in a way that they can't touch it.
5.6 million straight to the government. But if we have your plan in place or with your knowledge, that would be zero, right?
That is precisely what I do for a living.
Wow. And are you rich and famous? You should have like lots of clients and
You will hear from me.
there we go.
You will hear about me.
I like it. Yeah, you're probably the guy in the background that no one knows about that's handling
Yet.
all the rich and the famous. We have a celebrity in the background here, Tim, and we didn't even know it. Okay. This guy's probably in a dungeon somewhere. People that the stuff you're telling me seems illegal.
It's legit, and it's just that the lack of awareness in our communities. We are busy making money, but we don't realize making money is different than managing or holding an asset.
Yeah, and making money
There
comes
are
at a price.
If you think about it, there are three phases of money. Okay, there are three phases in people's lives. The first phase is called the accumulation phase, which most people stay in from 20s to about 60, 65. The second phase is called the distribution phase, where you start after your retirement and go until the time of passing. That's called distribution or retirement phase. And then there is a third phase of money called the wealth transfer, which is when it's time for the next generation to pick up on your assets. IRS has plans to tax you in all three phases. The problem is when we stay in accumulation phase being the first one for 40 years, we are not yet getting ready for the second and the third phase yet. We are so busy in our accumulation phase. But if you knew what I know about taxation, about how the assets have to be structured, what kinds of trusts, there are 15 different types of trusts. People don't even understand what value a particular trust type brings in your portfolio. Think of it as bands, net worth 1 to 5 million, one type of plan. Net worth 5 to 10 million, another type of plan. Net worth 10 to 40 million, another plan. 40 million plus, totally different plan.
Yeah, that's crazy.
So
that's amazing.
You got to start planning. And it's also a concept of present value, future value. So if you are, let's say, 45, 50, and you're 10 million or 5 million in net worth today, you have to realize the speed at which you're going. If you grow your asset just at 7%, just conservatively at 7%, every 10 years, you're going to double. That means in the next 30 to 40 years, you're going to have 3 to 4 doublings. That's 16 times the asset base you have today. That's 40 million, 50 million plus. Some of these people here, or people you are working with, could be 100 million plus. They're not realizing.
That's the goal, right? I mean, we just want to accumulate more and more and more. It's like you're saying. But I mean, now I'm changing my tune. I think I'm going to just sell everything, move to Mexico where they don't track my database, and live happily ever after. That's plan B right now.
Well, if you want that citizenship here, it's global assets.
That's good. That's good. See, I like it.
Yeah.
Well, I think that's cool. So how do we get in? What's the first step? How do we get in touch with you? Is there email? Or, you have Instagram? I'm sure you don't have Instagram. This stuff can't be on Instagram.
I can punch in my number. Aman is the best way. Aman, Kapil, we can all share our numbers or profiles or something.
Please send that. This is all good information. We're going to post this on YouTube. So if you don't want your face out there, Tushar, tell me now. But you'll probably get 2 million views, and it gets kind of crazy. So I mean, sometimes.
Give me 1 second.
Yeah. So first step is to call you. Figure out what the next stage in the game is. What information do you need? Tax returns, bank statements.
No, just a quick intro, usually a 15 to 20-minute intro call, and I would like to at least be aware of where the referral is coming from. So in this case, you'll have to refer this call.
Yeah.
And, hey, we met with Aman on this date, and, from there, the referral coming in, that's the best way for me to start.
Okay, cool. Yeah, so perfect. Send everyone in. I don't know if you punched it in here, but we'll get in contact with you. floor is yours, boys and girls. Let me know if you have any questions.
Just if I'm allowed to share, I can just share my information.
Yeah, go ahead. I think you're allowed to share, right, Tyler?
Yeah.
It says sharing is okay.
Yeah.
I actually live.
I
in
knew it. I knew this was a government thing.
I live in between the data centers. Actually.
Yes, perfect. Yeah, good placement. Good placement. You're
Yeah, but
safe
I
there.
think between me, Kapil, and Aman, you got Amandeep, you got a lot of coverage there. Happy to help based on the nature and the complexity of the cases. We all
Yeah.
can come in and reach out.
Yeah, that's awesome. No, I think I'll definitely reach out for sure. I think if we can plan this, I own several properties across the country, and if we can get these assets producing, I won't end up broke when I'm dead, or my family won't. And getting taxed 40%, that's $5 million at minimum. If I just don't do anything for the rest of my life, that's a lot of money.
You got to start thinking about, and we work and partner with a lot of estate attorneys in the background. And also, we can chime in. Actually, estate planning is also a combination of your financial professional like me, a CPA, and an estate trust attorney working in tandem or working in together. You should always engage 3 different people to do your estate planning effectively. So I play that role. I can, bring in, I have connections all across pretty much, we work with partners all across the country in all these different spaces. So happy to help out in case anybody needs help.
Perfect. Well, I appreciate the time, Tushar. Amandeep, thank you for the intro. Kapil, you didn't say much, but I still appreciate you here. You look good.
He's my partner in crime. So you reach out to me or him, it's almost
he's
the same.
He's the guy that really handles everything in the back end. I know those guys.
He
You
just
look good. You look good. You speak well. You know the product well. That's what
he's the boss man. I'm the working guy. How about that?
It makes sense. I sniffed it out pretty quickly based on his silence.
We work as a team.
That's it. Yeah, teamwork makes the dream work. But we appreciate everything you guys have performed for us today. I know for a fact I'll be reaching out to you, and then I'm sure we'll get some questions later on. Tim, send me that screenshot, and I'll get that thing posted later today.
And I'll tell you, anytime people are in, you guys are in the field working with people who may have assets, who may be looking, hey, I have money in my, let's say a New York Life Whole Life or some of the older assets. Just be mindful of one thing. Just like technology changes. Remember, when I was brand new in this country, there used to be a metallic phone called Moto Razor. That was the age of the thing. That now it's all about smartphones. Sometimes I hear about, hey, we should do insurance and separate, investments separate. No, that's somebody talking about a phone and a laptop is separate. Today my smartphone is way more powerful than my laptop. It's a device for me. So similarly, insurance industry is a wealth building industry, and every 5-6 years it updates and upgrades the products. If you have an older product somewhere, maybe your money is stuck somewhere, not growing fast enough. Instead of just diluting it, people are not aware, but you can upgrade it and then pull money out, which is way more powerful than just breaking the product and just taking the money out. The clients are not aware about it. So that's something.
That's more like a refinance, really, right?
Yes, so you do kind of a refresh or a refi to the latest and greatest first, and then use that money if you need to. But that's something, we all can as a community work together and share some ideas on that.
Perfect. Yeah, that's awesome. Yeah, people don't realize that. We deal with plenty of clients. So just for the refresh purposes, I think that's a good conversation starter for all the agents out there. And future, like I said, future conversations with potential homeowners, past clients. This is something that you guys all need to tap into to understand better, so you can just look better at the end of the day. But cool, that's awesome. Any other questions?
Last chance, y'all. Going once. Anyone have a question?
Oh, Tim's reaching for his mouth. No, he's going type. He's typing. He's typing. All right. Well, we appreciate you guys. Thank you so much, everyone, for tuning in. We'll be back next week, and I'll get this thing posted to YouTube very shortly.
All right. Thank you. Do send us a link. Thank you.
Thank you
all.
Guys.
See y'all.